Let's go back in time to the year 2000. NSYNC is topping the charts, Billy Crystal is hosting the Oscars, some 15-year-old kid named Michael Phelps is swimming in the Olympics. But who cares? He didn't even win a medal. Now, in 2000, if I asked the average investor if they owned something called an ETF, they'd likely just give me a strange look, because most people had never heard those three letters spoken in that order before. And I really couldn't blame them. In the year 2000, Vanguard didn't even have ETFs. But if we fast forward $5 trillion to the here and now, ETFs are essentially as well known by investors as the ABCs. And for good reason. ETFs have flooded brokerage accounts, 401ks, and IRAs over the past 20 years because they helped investors construct their portfolios with lower costs, better diversification, and better personalization. Like Billy Crystal in 2000 hosting the Oscars for the 7th time, ETFs today are a household name investors have come to know and love over the past 20 years. But if you're more interested in what's ahead of us than what's behind us, let me introduce you to direct indexing. In my personal opinion, direct indexing right now is like Michael Phelps in the year 2000, a skinny kid hardly anyone was talking about that became the most decorated Olympian of all time. So why would I think that? Because in the right circumstances, direct indexing can be even better than ETFs for lowering costs, improving diversification, and personalizing a portfolio to your unique needs. Like Mark Twain said, history doesn't repeat itself, but often rhymes. And I couldn't think of a better quote to frame how I think direct indexing will change the investing landscape over the decades to come. Since this video is just a 101 introduction to direct indexing, I don't want to dive into the weeds too much, but here's a summary of how it works. Whereas investment vehicles like ETFs and mutual funds allow you to indirectly own stocks in a particular segment of the market, direct indexing is a technique where a portfolio manager helps you directly own a collection of individual securities you're interested in. Whether you want to invest in the S&P 500, the Dow, the NASDAQ, growth stocks, value stocks, anything stocks. For whatever you can find in the world's most popular ETFs and mutual funds, direct indexing is just another way of investing in your desired slice of the market. For specific illustrations on how direct indexing is already helping investors lower costs, improve diversification, and personalize portfolios in ways that ETFs and mutual funds cannot, I'll post those topics in standalone videos and link that content here once it's uploaded. But if you want to learn more in the meantime, check out the short blog post I've linked in the description below on how direct indexing takes tax loss harvesting to a whole new level. And with that, thanks for watching, and consider hitting the subscribe button if you want to learn more about investing, retirement, and all things personal finance. It's been a pleasure, as always, and see you in the next video.